Hello, welcome back to Making Money Manageable with Alan Dembski and Juliana Jansen. Today's topic is an interesting one as we are approaching graduation season right now. So I guess it would have been it's a good time to be doing this topic on handling student loan debt. We've recently had some clients come in with large amounts of student loan debt after graduating and after a few years after graduation,
Yes.
especially now that people are like, oh my God, this balance is pretty big, and now we have to start really figuring things out as we're going forward. So today, talking about student loan debt and maybe some strategies on how to handle it or hire somebody like us to start working with you in the foreseeable future to knock this stuff down.
Yeah, and this video could be hours long because the topic is very complex. There are a lot of different types of student loan types out there. So we're just trying to get an overview. When I work with clients, I do like to call the student loan providers because sometimes that's just the easiest way. Everyone seems to have a little bit of a different situation. So it's just easier for us to be right on the phone with our clients to help them through it. But the first step that we always tell our clients, a lot of times people come in, it's overwhelming. It's been these
Mm-hmm.
loans have accrued over a number of years. And sometimes our clients don't even really know how much they owe. So the first step is to go through all of your student loans and figure out what are your loan obligations, what are the amounts, and especially what are the interest rates, and
Yep.
lastly, what type of loan is it?
We've seen interest rates all over the boards too. I mean, I've seen them as low as 4% and as
Mm-hmm.
high as 9, 10%.
Yes.
It's really depending upon whether government or private or where they're at, who has what, and
Yeah.
and it seems like it's almost like a mortgage too, where there's like reselling or recharacterizations, or companies servicing companies are different than the original company that you took the loan out. So everybody is different. So we can't just sit here and give you an specific answer to a lot of questions. That's what one-on-one conversations are for, is to help you answer those. But there are different types of payment plans available to people too. Are they income driven? I think when we were researching the topics or researching for this, there were 10, 12 different repayment options depending on the type of loan you have, which one you have. But you really need to find out, like you said, where the loan is located, how much it is, and when does those payments start. You have plenty of options with different lenders and income-based type of repayment plans. But in order to get the income-based payment plans, you really have to do some homework and some work on income and expenses to be able to do that.
Yeah, and I think a lot of people, because the loans have been on deferment, they've kind of gotten used to not having to make those payments, and
Oh yeah.
their budget has expanded to take over that allotment for the loan payment. So it's definitely going to be a process, and we're definitely encouraging anyone that has a student loan that's on deferment to really start looking at this so that they can get a handle on it, essentially. Also, the other thing, if it's a new grad, a lot of our existing grad people that have been out of school for a while have done this already. But if you're a new grad, one of the most important things is to set up auto payment so that you know exactly when that's going to be coming out of your account. And also, some of the lenders will give a discount on what you owe if you set up auto payment. So that's extremely important.
Yeah, and I've recently I was doing some research on this and found one lender was giving 1/4%,
Mm-hmm.
um, which adds up to, depending on how much student loan you have, can add up to be a lot of money down the road. The other thing is loan forgiveness. Plenty of people have different options. Teachers have different options for loan forgiveness. A lot of different industries have loan forgiveness opportunities that are available to a lot of people. But you got to do the research. You got to look into it or reach out to somebody to help you with that.
Yeah, and even some companies are offering loan forgiveness for their employees.
Yeah, and the Secure Act 2.0 help employees with this, or and employers for recruiting. If people have student loan debt, employers can contribute to that person's student loans equal to a match, like a 401k match that's available to them now.
And that's part of why the strategy is important. You don't want to be making extra payments on one of your loans that has the possibility of being forgiven. So it's all part of looking at it holistically and figuring out what makes the most sense in terms of attacking the debt.
Absolutely.
And the other thing is there's a 6 month waiting period after you graduate. We definitely recommend not waiting for the 6 months. Use that time to get your strategy intact so that you know how are you going to attack these loans, what is going to be the strategy in terms of what to attack first and what maybe to let go if there's a chance for forgiveness.
And just like in any other video that you probably heard us, you got to set up a budget and stick to it, especially during the income repayment period, because it is another bill and it's probably going to be a hefty bill for a lot of people that you really need to know what your cash flow is. Once you're starting that new job, you go from, working part-time, if you're working part-time or not even working in college, and then you get a job and you're making a decent amount of money. You don't want to just, hey, I got money in the bank account, now I can go spend it. You really have to look at the budget, see what those payments are going to be, and start to make your lifestyle choices around what your obligations are now.
It's a great way to get your emergency fund padded. If right after you graduate, you identify what your payments are going to be, but maybe you don't have to start making them for
Right.
6 months, pad your emergency fund using your loan payment amount so that by the time the 6 months is up and you actually have to start making the payments, you've actually got a nice emergency fund created.
Yeah, so always be planning. And if you need any help, you can certainly reach out to us. And also, if you have any other strategies or any other comments that you want to leave, please drop us a note and we'd be happy to answer them or meet with you one on one. Thank you. And we look forward to seeing you next time.